Welcome to the Explainer. So, let's dive right into the ultimate investing showdown. If you've ever looked at your portfolio and thought, man, is my money actually in the right place? You are in exactly the right spot. We're looking at the reliable local market versus the sheer scale of the global giants. Should you keep your cash at home or send it overseas? Let's get right into it.
Because ultimately, we've got to look at the raw data to answer the one question every investor asks. Which of these markets builds real wealth? We aren't just buying random ticker symbols here. We are funding our retirements, right? We're buying our financial freedom. We absolutely need to know where our money works the hardest.
Now here is the harsh reality. A lot of everyday Australians are actually making a critical portfolio mistake right now by blindly picking the wrong side. There's this massive tendency to just stick with what we know, or, on the flip side, chase global hype without really understanding the fundamentals. So let's clear up the confusion once and for all.
All right, let's bring in contender number one, our reliable local heroes. For Australians, this is home turf. You see these companies literally every time you walk down the street or check your bank account. And honestly, there's a deep comfort in investing in the things you use every single day.
The ASX is the absolute bedrock for so many domestic investors, and for one massive reason. It puts cash directly into your pocket. The Australian market is uniquely structured to reward you with regular, reliable income. If you're the kind of investor who loves seeing that cash just hit your brokerage account on the regular, well, the ASX is built exactly for you.
When you go local, you are backing massive, established pillars of the economy. We're talking absolute titans like BHP, Commonwealth Bank, CSL, and Wesfarmers. These are definitely not your speculative fly-by-night startups. These are incredibly profitable cash cows that basically dominate the landscape. And the best part? They share those profits directly with you.
But then, over in the other corner, we have the undisputed heavyweight of the world. Now, if the ASX is all about that local income, the US market is just a completely different beast. This is the arena of global dominance. We're talking about companies that literally change how the human race lives and works.
We're talking massive scale and explosive growth. Think Apple, Microsoft, Amazon, Nvidia, Google. These companies have market caps larger than entire countries. They aren't really focused on paying you cash today. Instead, they reinvest aggressively into themselves to become even bigger tomorrow. So, it's time for the clash. How do you actually weigh up a massive dividend yield against incredible capital growth? Let's break down this head-to-head data so you know exactly what you are getting into.
Okay, so the crucial point is this. The ASX absolutely dominates when it comes to strong dividend income. But on the flip side, the US market offers vastly higher growth, a much larger market size, and way deeper diversification. See, the ASX relies super heavily on mining and banking, while the US exposes you to that cutting-edge global tech.
But wait, investing globally isn't completely perfect. You have to watch out because US stocks expose you to currency risk. Think about it. Because you're buying in US dollars, if the Aussie dollar suddenly gets stronger, the value of your US investments actually drops locally, even if the stock price itself went up. It's like this hidden layer of volatility.
And that brings us to the absolute biggest hurdle that trips up so many investors, the complex trap of taxes. Because hey, it's not just about what a stock earns, it's about what you actually get to keep after the government takes its slice. And trust me, the rules here could not be more different.
The home team gives you a massive local advantage called franking credits. Basically, because an Aussie company has already paid corporate tax on its profits, you don't get double taxed when they hand it to you as a dividend. You get a tax credit. This is a literal superpower for local investors.
Conversely, if you aren't careful, international investing will definitely cost you. With US stocks, you face frustrating currency conversion costs, and on top of that, the US government applies a mandatory withholding tax on your gains. If you aren't paying attention, a big chunk of your income just gets slashed before it even crosses the ocean.
But don't panic. Beating this trap is actually super simple. Step 1, just acknowledge the tax rules. Step 2 is your golden key. Fill out your W-8BEN form. I know, it sounds like really boring paperwork, but completing this automatic broker form literally slashes your US withholding tax rate from 30% down to 15%. It is an absolute must-do.
All right, so we've seen the strengths, we know the weaknesses, and we've uncovered the hidden traps. Let's move to the judge's scorecard and figure out how you should personally position your money.
Ultimately, it all comes down to your personal strategy. If your goal is to generate steady, reliable cash flow today to pay the bills, you definitely want to lean into the ASX. But if you have a long time horizon and you want that aggressive capital growth over decades, the US market is without a doubt your champion.
But here's the real secret from our sources. Why limit yourself? The absolute best strategy for resilient, long-term wealth is a powerful tag team of both markets. Combine them. You can use the reliable cash flow of Australia to smooth out the bumps and the explosive growth of the US to really drive your wealth forward.
To put that into perspective, imagine a brilliantly balanced portfolio that allocates 40% to ASX ETFs for that steady, franked income, then another 40% to US ETFs to capture the massive growth of global tech, and finally, 20% to broader international ETFs for the ultimate global diversification. It's the absolute best of both worlds.
So, now that you have the playbook to dominate both the local Australian market and those international US giants, the only question left is up to you. What is your first move going to be? Are you going for the juicy local dividends or chasing the next great US tech boom?
Remember, the absolute biggest risk isn't choosing the wrong market. It's choosing to stay out of the market entirely while inflation just eats away at your cash. So, which side of the ocean is going to fund your future? If this explainer helps clear up the market confusion, make sure to like, subscribe, and let us know your favorite Aussie or US stock down in the comments. Catch you next time.